In today's video, I'd like to talk about an active setup inside of Monster Beverage in which we're currently getting a really nice entry opportunity. Now, our bias inside of Monster starts off with a weekly time frame chart, so that's what I'll focus in on first. After the weekly time frame, we'll move on to the daily time frame. After the daily time frame, we'll move into a 1-minute time frame chart to really pinpoint the exact entry. Now, off of the weekly time frame, our bias starts first with having a bunch of these signals right here. This is our squeeze signals indicator, in which we see the squeeze forming right down here. We're looking at the squeeze to fire long, and that too off of a weekly time frame chart. We've had a bunch of different signals at this point, 1, 2, 3, 4, and that really to me suggests that Monster Beverage should start to get going in the coming weeks. Not days, not minutes, but rather weeks. So this is a much longer time frame chart, and we're trying to use the intraday volatility to take advantage of this overall pattern for a better entry price. So that's off of the weekly time frame. Now let's pull in our backtester to see how effective this signal has been. This is going back 20 years off of the weekly time frame. I can see that right here, 20 years weekly time frame. And over that, we've had 5 different winners, 1 loser. The average winner has been an average gain of 21.6%. The average loser, a loss of negative 12.95%. Average trade duration, 7.833 weeks. And since we had that first signal already plot, we've already exceeded that 7.833 weeks. So in terms of where we're deviating from the pattern, that would be the one place off the weekly time frame. Of course, this is just an average, so keep that in mind. But off of our weekly time frame, that's where the buy stems in. Now, if we move into our daily time frame, this looks a little bit less clean. Our market pulse here compared to the weekly on the acceleration has now transitioned as of today's candle into a stage of deceleration. So if the candle closes exactly where we see it, then that's the beginning of a bearish market pulse. However, one thing that stands out to me inside of the daily time frame chart is if we load in our simple moving average using a 200 period, click OK, price action right now is bouncing right inside of that 200 period simple moving average. The 200 is at 92.40. Price action is currently in 92.49. If we come back to the weekly time frame, our market pulse right here is at 92.22. So the zone so far that we have is 92 let's call it 20, all the way up to 92.40, about a 20-cent range, looking to try and pinpoint an entry price to then take advantage of this move. Now let's move into our 1-minute time frame to really take advantage of this volatility that we're seeing. There I have the aggressive volatility box loaded in. I can also remove our backtester here just to keep our charts a little cleaner. And using this model, you'll see our aggressive entry price is at 92.26. So if price action falls into that 92.26 area, that's where we now know we have probability stacked on our side. This is a key reversal zone. This is where we normally be looking at getting long inside of Monster's Beverage anyways. Now we have both a weekly and a daily time frame bias along with the reason to actually participate in this trade. The weekly off of the squeeze, the daily off of the 200 simple, and the actual entry price we said, or the zone, was 92.20 to 92.40. You'll notice that zone really takes you to right inside of the volatility box zone right here as well, inside of the gray dashed line along with the clouds. Now the ideal entry price, if we can get it, would be 92.22 if price action falls down here below. Otherwise, so far, we've tagged the 200 period simple. We have yet to tag the weekly market pulse, but if we did see that move to 92.22, bam, that's where we've now also tagged the weekly market pulse. So this is now how we bring all of our setups together. So we know our entry price is in between that 92.20 to the 92.40 zone. In terms of our overall long side targets, that's based either off of the weekly time frame chart, in which we're looking for an average gain of right around 20%, or rather the squeeze to fire, whichever direction it fires, that's our exit point, so the first green dot. Or you can even use something like the daily time frame chart, looking at a retest of the market pulse. If you're looking at this again as a swing trade, a shorter swing trade, and if you're looking at this only as a day trade, we can come into our 1-minute time frame chart. If we did see that 92.22 entry, the first target would be at 92.47, so much smaller, but keep in mind that's a day trading target only. The stop would then be moved to break even outside of the clouds, and then we're looking to see how high is high. However, given the fact that we have both weekly and daily biases, I think my inclination here is to really have a very flexible stop here, instead be looking at the volatility box for a potential entry zone, and then manage this trade really off of the weekly time frame. Another ideal scenario that some of you may find interesting is buying 100 shares of stock. and trying to do a covered call against it, or running the wheel on the other side by first starting with selling the cash secured puts, where you can collect a decent premium, nothing too crazy, but it's decent for this overall move if you're looking to try and use options instead of stock to try and participate in the overall move up if we get it. All right, hope this video helps to bring together the weekly, the daily, and the 1 minute time frame chart in a stock that's currently triggering with the real example. Take care, everyone. Good luck trading, and we'll see you in the next update.